Here we have the current stock market update for Intel Corporation, stock ticker INTC. Before we begin, if you find this educational material to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts in the comments section below so that other traders will be able to find this information more easily on the platform. So here we'll be looking at the shorter term timeframes again. We have been doing this a bit lately. I would normally prefer to look at longer term timeframes, but what we're looking for here in this stock chart and in this price history is evidence of a reversal zone. So in order to do that, the best way to accomplish this and get the necessary detail within these candlestick formations is to look at the shorter term timeframes. So in this video, we'll be looking at the 15-minute price chart. Each candle on this chart represents a 15-minute trading period. So anybody that's been watching these prior videos might notice some differences here in this current time frame price history here. Essentially, what we're going to be looking at here is a Fibonacci analysis of the more recent price move higher, because we have seen some very significant price moves here in the positive direction, where previously what we were doing was looking at the price movement in this downward direction. So essentially, we're flipping around the analysis here because these recent price moves have been so high that they have broken above prior resistance areas at 2212. But then additionally, what we can see here is that we've already retraced all of this prior descending price move here. This is the price move that occurred from roughly the end of August to roughly the mid parts, roughly September 10th, September 11th of 2024, when share prices did manage to post these lows at 1850. So since then, we have now recovered all of these prior losses, and share prices are now moving strongly in the upward direction. So these are significant price moves here, and we have also seen some price gapping formations in the upward direction. So overall, this is an encouraging price movement for the stock. I would say probably the most encouraging factor is that we did break above that prior resistance zone at 2212. This was significant because this is essentially marking a double top resistance zone, and now we have broken through there. So this is not a concern for traders that are currently long this stock at the moment. So, as we can see here, share prices are continuing to move higher quite strongly. A lot of this is based on new information suggesting that the federal government is giving new grants to Intel, and that more of the federal government's computer processors are going to be made by Intel. This is positive news, and it's actually it's really necessary news because somebody needs to step in at this point and make sure that Intel does not fail. My personal opinion is that a new CEO is needed. I think that's beyond obvious at this point. I don't understand why that conversation is not being had more intensely. Intel's laying off huge portions of its workforce, which I think was also a necessary exercise. Their prior workforce was the same size as NVIDIA's workforce. It doesn't need to be that large. But it's clear at this point that the destruction in share prices that has occurred under Pat Gelsinger, it's beyond what should be considered to be acceptable, far beyond. And his position should be at risk at the moment, in my opinion. But, we will continue looking at the price chart here, and we will look at this current price movement to the top side and look to identify some price zones which would suggest that share prices could be ready for a reversal here somewhat soon. So clearly, this movement in the upward direction has been quite forceful. We've even seen price gaps in the process. Current share lows come in right around 2140. Which is a significant area because we're trading just above this prior price gap. If we do start to move back into this price gap, the expectation would be that share prices could then fill that gap to the downside, and that could generate some new momentum in the negative direction. In addition to that, we have to look at the indicator reading on this time frame because there's starting to be evidence that this recent trend rally here, the momentum that created that trend rally, could be in danger of reversing itself, as we can see here. If we look back further in the price history, we can see instances in the past where that type of activity has occurred and it has been a false break to the downside. So a simple movement lower here is not necessarily enough to invalidate this trend wave here, but it is starting to become more obvious at this point. So it is now possible that we could start to see some bearish movement start to unfold now that share prices have posted these new highs above 2250. So currently, where would we need to see prices go in order to reverse this bullish bias that we have currently? Well, in my view, I would be looking at the 38.2% Fibonacci retracement at the moment. And there are a few different reasons for this. I would essentially be looking at roughly the $21 level. And we're not trading too far away from there at the moment. Right now, we're trading right around 21.60. If we do break below this $21 level, I think it's significant for a few different reasons. One would be the fact that this is where the 50-period exponential moving average has currently moved into. And then number two would be that it is the 38.2% Fibonacci retracement of this ascending price move, of this recent bull rally. So if we do see share prices move into that $21 area, that would give the stock an opportunity to refill its positive price gap, which occurred previously. Because as we can see here, the bottom of this price gap comes in right into contact with that area, right around $21 per share. So that is another reason that this is a significant area of potential support. So overall, as long as share prices are able to maintain a foothold above this region here, not show a forceful break below there, and definitely not show a daily close below the $21 mark, I would maintain a positive stance on this stock. There are some early indicators here that we could see, that we could be seeing a reversal here because, this trend wave here is starting to show evidence of a break in the positive momentum that was supporting share prices. But we do actually need to start to see some evidence of that decline in the share price itself before we can start to draw assumptions based on this indicator reading. So, currently this is my level to the downside, $21 per share. This even represents a fairly decent buy zone. If anybody's interested in buying the stock, I probably just wouldn't enter into the full position in that area because you do have a price gap right around there, and this could generate some new momentum to the downside if share prices do fall into this region. So to the top side, the main area to watch is 22.58. If we can see a break right around 22.60, that would be a very bullish event for this stock, and it would start to signal the possibility that a longer-term bottom has now formed right around $18.50. So that would destroy a lot of the bearish argument here that is calling for this stock to fall into the lower teens or possibly even into the single digits, which is another number that I've heard recently people coming up with recently. I don't expect that to be the case. So here's the current stock market outlook for Intel Corporation, stock ticker INTC. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.